Great and beautiful morning, afternoon, and evening to you all, wherever you are joining me at this moment. Welcome to 135 edition of Investdata Trading Academy live with Ambrose. Yes, glad to let you know that the market, globally and even down here, local market, we are seeing that market is sustaining their positive trend in the matured market. I mean, across the globe, while we are seeing a rebound from what we saw yesterday in the local market tells you that this market is very very dicey. I tell people as matured market are looking forward to see US inflation data. Market is panic is not there as we speak now. Tell you that something is also pushing investors confidence as we speak now. Let's go on with the market as we speak. Global markets positive sentiment strengthened ahead of US inflation report in the midst of cautious trading as merger and acquisition talks continue and positive earnings hitting the market in the midst of what geopolitical tension and oscillating oil price as we speak across the globe. This as what is have been shaping the market for a long time. The volatility has been these are the factors. But as we speak now, a mature market was seen almost like a week now, extending to this Tuesday morning. Stocks are remaining the equity market or stock market around the globe are remain in green position, which is good for the market. As we speak now, I'll tell you that US market is looking up, Europe market all are looking up, also in Asia market. While in Africa we're seeing also an up market. It's a good one. Down here locally, if you look at what is happening in NGS. NGS is in green this morning as we speak. So it's a good one for the market. I know that the green here is light, but it's a good one that as we speak now market is in green. As most of this matured market open higher this morning, I tell you that expectation of a US price index as further kind of expectation that it will further slow down from the July figure that they saw as at the end of July or this month. Now we're looking forward to see August data and many expectations from investors around along with that since we saw a slowdown in July, we're likely to see that slowdown also in August. That is what is also pushing the confidence, knowing that the energy and the commodity price has continued to kind of pull back from their peak. That's just a sign that knowing that this energy and the commodity price has what has pushed cost up. Now they are kind of tapering, they are coming down. We expect that it's going to also implement. That's why, despite the expectation of inflation figure, there's no panic in the market. People are still taking position. I can see that S&P, Danjo and Nasdaq all are in red. Back also to to European market where you see that despite the plan to kind of ban the Russia oil, you see that price there continue to look up in the midst of all this as major talk also is supporting it and positive earnings. Even when some economic data from that zone are still missed, you can see that confidence is still there because they are looking at yes, the little kind of progress that that Ukraine also gaining more ground in the pushing Russia back to back. That is also a plus for. But I believe that this continue to kind of continue to influence the market up and down on the international front. But I believe that for those that are playing any market now, any instrument you are playing, don't carry the way with what we're seeing this kind of positive uptrend. Or you don't see that know that your stop loss is intact, your exit strategy, your profit taking, all are intact so that you won't be hooked in all this world. That is the way to stick. Don't be carried away with the market direction. Always trade your plan, and when you trade your plan, you are good to protect your capital and know when to work, when to exit the market, and when to put on. These are very, very key important things we should also note at this point. Good one. I said that oil price as we speak have also rebounded to trade above $95, which is for barrel at this hour, which is good, knowing that this oil has gone as low as almost 8 months low, below $90 almost per Ukraine and Russia conflict. For me, coming back again to above, it says like I told you in one of the class that we're going to see this oscillation, and these are the major factors driving the volatility across all the markets. But you can see that it's kind of a rebound in the crypto currency market, around above 22,000 as we speak now dollar. It's a good one, but you can see that that has been across most of the apart from you are seeing that the treasury market over there in the mature market are even declining in terms of it, and that's that they are seeing opportunity because as inflation continues to go up, that is what we want to look back here in Nigeria as we speak now. For me, I think the whole thing look good now. I tell you that the month of September has always been a mixed month, but we expect that as investors in this market, you should know how to trade, profitably in our own market. Back home here, I want to look at what is happening in our market before going to the chart. I'll tell you that the market is not doing badly. Yes, you might see some of pullback, and this pullback or mid sentiment or kind of oscillation. But this oscillation is also not threaten any investor that has know what is doing in the market, because we are going to tell you what is about to happen. At the same time, you need to also follow those that also guide you. Information that you use is very, very important. Like I will tell you that if you remember yesterday, we started it that in equity investment, there are some things that are very, very important. And these are part of the things we're going to discuss mainly on the coming master class, how to use what time and price analysis to take what profitable investment decision. If you know exactly what you are doing in the market, you must understand how to use time, volume, and price. If you use them effectively in the decision, you must be ahead of the market. It's only if you get the market, because nobody has 100% of the market. But if you know how to use your time, price, and volume at any given time, I will tell you, you get most of your decision right, and also that will also boost your bottom line at the end of the day. As we speak now, in equity trading, timing is everything. And when I say time is everything, people will understand. You cannot you cannot over underestimate the power of being in stock at the right time and also at the right trade. If you are in a trade at the right time and also at the right actually, if you are in a trade at the right trade with the right time, sorry, that also help you to make profit. But when you are in a wrong no you are in a trade at the wrong time, see, there's one thing: you are in a right trade at the wrong time, you're going to make loss. But when you are in the right trade at the right time, you are bound to make profit. That will impact your portfolio positively. This is different from sitting at the front of your computer or laptop, try to monitor price movement from the beginning of the market to the end of the market. That is not timing, I will tell you. And also, you try to kind of try to time every single trade down to the last minute of the trade. No, that is not what I mean at this point. Also, you want to give up because of you can't do all this because of time involved, because of sitting on the front of a laptop. All these are discourage you. No, this is not how to do proper timing in equity investment. When I mean timing in equity investment at this point, know that the contemporary technical analysis know how to look at or price action with time. These are what will guide you exactly to know what to do to take the right decision at the right time. Because if you want to sit down at the front of your laptop and say that is your timing, you are not there at all. Or you are tired of waiting, you enter a trade, you want to separate that trade, you are to enter to the last market close. That is not timing. You know exactly what is happening, in the market with your price action, your volume, and also what is ahead and what position, what is the time that the market is now. Like, remember, I mentioned on this class that you must know why, the end of the price, what the price close for the day, for the week, and for the month. These are key. Also, when you are doing market timing, you must understand what is the next action. For example, now we all know that today is the release date for US inflation data. And what are you doing? No, before now, what is the sentiment ahead of you? You are watching. Is it a positive sentiment? You can see that if the positive sentiment, what you do, you take a you buy into that. You want to sell into this positive sentiment before the news come. As it's coming out before the news tomorrow, you are exiting. Also, you bought and then you exit at a good price. But when you see that it's a negative sentiment you are seeing at the market, what you want to sell up before the news comes to the market. You see they are out to also part of looking at the price, looking at the time, and also looking at what these are part of what we're going to discuss mainly what in the coming master class, so that you also have time also to stay with to be with us there, because this is one of the teaching at the master class that one of the speakers will to dwell on and also give you reasons and how to use their time and what and price to take investment decision. The traditional technical analysis also indicator will create a roadmap of what price has done, or the chart you are following, but it won't give you what will happen in the next. And also, but because of that, you need to know what will tell you what will happen at the end of the price. You see, one thing is that traditional technical analysis indicator will take you through, to give you a roadmap that what price, what price on you are trading on the chart has done, but have not power to tell you what price is going to go to do on the right edge of the chart. But you will see the trend, and that is why I tell you that in investment decision, especially if you are trading equity using chart, you must understand the chart you are reading and what will help you to know exactly what to do so that you won't just follow bandwagon. We know that yes, trend repeats itself. We agree, but you need to know exactly when that trend will likely and what will give you confirmation. If you look at what happened in Access yesterday, if you are a chartist and you are trading Access chart alone, you know when you see a kind of a little breakout from a strong resistance, you want to check out that resistance Access did yesterday. Is it with a volume, or you can see that it's trying to break out? It is today that is it confirmed? You know that's why at that particular time you don't need to jump. That's why I tell you that in Investdata we're not only just trying to tell you that to point out a breakout or a bottom, no, or top and bottom. No, we want to show you potentials that you can see. No matter, I'll tell you, you guarantee that you make profit, not only just to catch top and bottom. No, that those things that also guide you, that to know the potential of where we are entering, how far it's going to take you. That is part of what we just teach when we are in our technical analysis, so that you understand what it takes for you to be in a right stock, and also what will give you sign that yes, they have high potential for that stock to take you to where you are going. Once you have this at the back of your mind, at that time you now say yes, you are in the market world to make profit. Is very very important, and these are part of also what we're going to discuss in that master class. In the prevailing market situation, as a trader or technical analyst, look at the market interval dominant that utilize volume and momentum. That utilize what volume and momentum. Any indicator that utilize what volume and momentum is very very key, so that it will guide you as an analyst or a trader or technical. You need to understand this. These are the things that will help you to make what informed decision. That points to where money is flowing to, and whether a sector or individual stocks. This will help you because it is that ability to know where there is a dominant utilizing of what volume, and that is where you know exactly what to do at that particular time. Once you're able to point it out, you are good to go when you are trading. That's why I said it is very very important. The importance of volume, price structure, and the money flow cannot be overemphasized when looking at your trading chart or analyzing any market you are trading. Whether you are trading crystal, you are trading FX, you are trading future, you are trading commodity, you must understand what is the volume direction, what is the price structure, what is what also the news on ground. You need to understand, because these are the things that will also form what the psychology and the sentiment between in the market at that particular time as we speak. Yesterday we discussed how to to trade with news, which I made it clear yesterday. But today, now that we've seen a market oscillating, the morning it opened slightly in the red. As we speak now, it's in green, ahead of August CPI, which is a consumer price index that is likely to be in the market on Thursday. Today is already Tuesday. We saw yesterday what happened. Cautious trading is already in the market. What are you going to do? And what are the things that are very important at this point? Apart from the inflation figure we're expecting, liquidity level is also a key thing that we need to also look at as trader or investor. And you look at our market as we speak before now. Before now, our market was highly dominated by foreign investor. But I'll tell you, since the post COVID-19 era, we have seen that the domestic institutional investor have taken charge of the market. As at 2021 was around 2020 to 2021, around 46, 47 of the market transaction was coming from the local domestic investors, domestic institutional investor. But as at also 2022, at around April, till around this last July or August, we are seeing that it has moved to almost 60. But since they started trimming down their transaction, you can see that in the last Q2 half year result, you didn't see activities of institutional investor, because of the rate hike as also moving there, also kind of jack up read for the physical market. That have become attractive for them. But as we speak now, you want to look at what are these yields in this market. Is this still what they should look at? Yes, we know that they have the big fund to push the market around. Equity market is just at this level, trying to sustain at this point because there's no liquidity in the market. But we believe that at the end of MPC meeting, and also seeing the August inflation data, that also inform where the market will. That's why I said I asked the question last week in one of the class, that what are the major factors we are seeing that will push the market out of where it is now, either up or down. Good to mention all this I'm just explaining. But we want to look at what are the yields in the market that you think, okay, recently at the open market operator for Treasury bill, so that the 364 days Treasury bill has gone almost at 10%, while the 80, 180, 181, 82, or 91 is still around 5%. Also, you can see that like 3 years bonds around the 13.01, while 7 years bonds around the 12.7 or 12.691. Then also 10 years about 13.05%. But if you notice, look at inflation. Inflation is already, as we speak, for the month of July, around the 19.64. What does it tell you? It tells you that yes, all this return in this place are already in negative because they are below inflation figure. And the only way you can hedge against inflation is you are in a sector or level that will give you a return that's above what is inflation is doing at any time. And we're looking forward to see another inflation figure. I believe that inflation figure will not come below what? Below 21%. If it comes below 21%, good. But if that happens, that will also tell you that no, all these instruments were mentioned are already in what? In also in deep another red. And that's why I believe that now that CPFs have stayed away from the market for a while, which we have seen because the volume traded in the market is also giving you a sign that there's no liquidity in the market. Institutional investors are not playing the market as we speak now. For that, if we're expecting them to come back, it is the least number that will come from Q3 that will also the this inflation data also inform them if they are seeing a negative return. That also I know that yes, that market is deep, the fixed income, but I still tell you that there's opportunity for us to make money what in equity market. Which I believe that when the PFA starts coming back to the market, that will change the flow of funds. But to speak now, because they are increasing their stake in fixed income, that's why we are not seeing much happening what in the fixed in equity space now. But that should not send any panic to us, but rather we should take no position ahead of this number. But I believe that cautious trading will be from now till the inflation figure. The past all eyes also are still on access bank. But I believe that the ultimate factors that also give another direction is the MPC meeting, which will come around the 26, 27 of September. For that, these are what I believe that shape the market in this period. But we want to look at the market now, what is happening live in the market as we speak. Next, the market is flat here now. Even as we speak now, oscillation continue, but as we speak, market is doing around the, trading around the, around 49, 49,000, around 49,600 and 600 and 36.64. That means market is up slightly by 10.29, that which is equal to 0. Terms of percentage 0.02% up. But I see the rate of oscillation has increased. But if you look at market breadth, I'll tell you market breadth is not looking too good. We're seeing a negative market breadth because we have nine losers as we speak now against the what against these gainers in the market. These are the factors that also shaping the market now. As you are seeing more sellers, less of has been shown on the decliner table, and compared to what we are seeing in Atlanta table, we already know that yes, the market also, the green we are seeing might not be sustained until end of the market. We'll see activities also will change the table round. But as we speak now, ICO is leading on the loser chart, followed by Transcorp. You can also see this Quad V. You can see Cavaton also are the following. You can see Sovereign Trust Insurance and also FCMB and UBA. These are the ones on the loser start now. But on the gainer start that are 6, you can see also Multiverse. You can see Police Microfinance and also Access Corp. Fine. You can see Waco and Fidelity. Fidelity was adjusted today for Tenkobo. Into dividend still back on what on the gainers table. That is good for. And also can see African Prudential on that table. But if you look at the terms of volume, the volume is very, very important. Volume, you can see that Transcorp is leading, followed by Zenith Bank. You can see Charms and UBA and DT Code. All of these are what on the top trade in terms of volume. But here we look at what is happening. We're seeing Waco coming back to gainer start yesterday. So among the losers start yesterday, you can see Waco now coming back now to the gainer start, which is good. Then we look at what is happening in look at Fidelity charts, look at Waco, look at Access Bank chart. Then we also look at the ones that are losing now. Among that are losing now, UBA that we are still expecting not to go because before the markdown. Also look at what is happening in UBA if time permits us. Let's go straight to the chart now to see what the market is doing as usual, because it's very good that we look at the market ahead of this inflation data that we're expecting, how it's going to shape the market. But let's call the indicators first. Then I will tell you how we want to look at so that you will know exactly what is happening in the market right now. Where is the fund flowing to? We saw fund almost entering the market on the weekly and the daily chart. You know, as reviewed by money flow, we want to look at it and see what can make out of it, to look at how inflation data we're expecting going to influence decision. We will see more fund entering if you know, or these are the things we want to look at. Yes, if you look at the T line now, so that let me make it clear, we want to know exactly where the market is. You know, because market is trading here, let's look at exactly where the yes, if you look at now, market is still below the T line, but now on a marginal red again. Initially, when market was starting at class around 2, it was slightly in green. Now can see that it's already in red with a low volume. You can see it here compared to what we saw yesterday. See the volume as speak at this hour, still small volume, and the market is slightly also below the T line after trying to cross over, tested the T line yesterday and pull back and close what lower this morning. It's also open below we open below, turn green, but as speak now, market is slightly also below the T line for this moment. Fine. The good thing here you can see, like I see that money flow is still looking up. Now almost 65, you can see which is a good one. And if you look at your MACD now, MACD on a daily chart, if you look at this histogram formation, that the MACD is still a bit bullish but coming down to also give a sign of weakness. But I believe that the momentum is weak at this point. But what I want us to do now, since we're expecting the inflation figure, want to quickly look at what has happened in the last look at one more chart. Let's look at one more chart from here, because the inflation figure comes to the market every month. You know that, and now that want to see what has happened in the last 1 month to give us exactly the situation in the market, so that we know what to do. This page is again. Okay, sorry, yeah, it's back now. I wanted to look at the 1 month chart so that we can start from there. Like the state internet cost of rain here is very slow. It's not moving as usual. We're supposed to move. The the chart we're using is not moving as expected. I want to use to for more explanation. The 1 month chart is not coming up. Okay, this let's use this one to continue before I come back to that place. This is the life. This 1 month chart here. This is the 1 month chart because we're already expecting another data, inflation data, and don't forget that the last two MPC meeting, the first one was in May, the second one was in July, another one expected in August, and since then you can see after May we had this which gain here. This blue, you can see the market have been declining. Here it tried to resist decline, but as to speak, the good thing the market has remained above the T line. You can see it here. We're seeing on a monthly chart time frame. Market is still strong. Money flow is still around 63 0.9, which is good. That is for the month. You can see that it's still trying to resist decline here. This is the month of September. We're already ahead of inflation. But from more information here, if you look at this structure, this price structure here, or price action, you can see that it has not even taken out this here. You can look at the point here. Market is still within what it gained in the month of May. We have to take it. Once you take this out, that is where we say another downtrend has been confirmed on it really on a monthly time frame. But from what I'm seeing, I want to look at what is the weekly chart telling us in this regard. It's very deep. On the weekly chart, you can see for yourself here that the weekly chart is already telling us that the market is also below the T line. It has formed a strong resistance that pattern here, price action here. But until market break out this level here, that is where you can confirm a new trend that is strong for the weekly chart. You can see also, as we speak, this is the position of the market that yesterday, but now this is also what the market is doing now. to tell you exactly where the market is going for today. This from yesterday, bread, which is also this black machine. But for me, the good thing that why I completed that, I want to tell you, look at the money flow index. Even as at this last week, market it has turned up, start looking up. Now money flow has touched as well as almost 25, 26. As soon as it's coming about to 33 points as at close of business yesterday. But this on a weekly chart. But if you look at the daily chart here, that's very, very important. This is why we're seeing already is a trending movement. Now, until market comes out to break out this strong here, and that is why we say yes, another trend. As I was say another low high. But as to speak now, yes, this is a low high, but you can see that this market on a tight trend now until break out this level. And yes, it's below the T line, but once it break out this structure here, this formation here, that is where you can see yes another. But the good thing is that if you look at your money flow on the daily chart, yesterday it was around 63.13. At this morning on the live chart, we are seeing also around the 65. Despite the market oscillating, we're also seeing the fund is entering the market as we speak. For me, let's keep that rather that tomorrow and after the data we'll see. But if the data slow down, fine. But the data of the inflation slow down, we will know. But if not, that will also be what I expect that it will also inform for decision of decision of MPC, Central Bank of Nigeria MPC meeting, at the end of the day. That is why we need to also mind, all this kind of trend we're expecting in the market. As we speak, you can see that the is still hanging, but let me take it a day time frame and see whether it will still come up here. Is it the internet? I don't know. It's still hanging for people. I believe that the way the market is going now, there's no cause for alarm. We're seeing also, if you can see clearly here on this formation, this for a weekly chart, you can see that momentum is also coming up. That would be nice if it is sustained on a daily chart, and we expect to see cautious trading between now and what and Thursday. I believe that that will shape the market. So that whatever you are seeing today in the market, don't panic because we are preparing to tell you how to take advantage of this continued volatility in the in the coming master class October 1st. I look forward to see every one of you in that class. I always encourage you to kind of know, go to our YouTube and subscribe so that you will see updated of news or analysis that also help you to take a firm decision, because I believe that once you are being guided, you make information that also impact your portfolio positively at the end of the day. Because of I don't know why the network this our chat today our technical analysis chat today is hanging. That's why I have to call the other one up so that we can also use that one. But I believe that tomorrow we also know why it didn't go up today. By tomorrow we would have rectified it to the glory of to also tomorrow we can use it for our further analysis the next day. See you and say enjoy the rest of your trading day. I believe that the market will still continue this oscillation mode, but don't be carried away, especially if you're in the right portfolio, in right stocks, when you know right sectors. Just who I believe that I've said yesterday that when you are seeing inflation, the best way to hedge against inflation is your position in what in stock market, and then also real estate, back commodity stocks. These are the things you should also invest at this time, because I believe they have what of getting to return what is above inflation figure to speak. Usually, if you look at the dividend yield coming from most of this company is high, but capital appreciation we are good to go in terms of return above inflation. Say thank you and enjoy the rest of your trading day. See you on the 1st of October, the master class. I believe at the end of the master class, your portfolio will not remain the same. Knowledge that will also help you to make information will also be shared at the end of that class. Thank you and see you.